The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day is Judo Capital, one of the best performers actually on the ASX today after Citi upgraded the lender to buy from neutral. It says credit growth remains resilient, net interest margins are well managed as risks tilt toward fewer rate cuts. It also points to the steepening US yield curve and narrowing interest rate differentials between Australia and the US, which usually support stronger sentiment toward Australian banks. So Citi's lifted the target price to $2 from $1.85. Back in August, Judo reported a small cost-led beat with OPEX 6% below consensus expectations. Higher net interest margins, though, were offset by lower banking revenue. It provided guidance that was broadly in line with expectations. It's targeting gross lending between 14.2 and 17.7 million in FY26. My guests today, Michael Gable from Fairmont Equity, Philip Pepe from Shaw Partners. Philip, is it a buy, hold, sell? Judo Capital.
Look, I would call it a buy. It amuses me that brokers are upgrading their bank price targets. If you notice that even in the major banks where most of them have been rated sells, price targets have gone up as people have one eye on the share price, one eye on their model and decide what's my price target going to be. Impressive. They're focused on the SME market. Recent APRA data suggested that market's growing strongly. They've got a market share of about 1.5%. I think they aspire to get to 3%, which means EPS doubling over more than doubling, tripling from 7 cents to 21 cents over a 4-year period if they can deliver that. And if they can maintain that net interest margin at 3%, that's better than the majors, which are about 2% or less. So it looks to be right space, right time. I'm actually positive the banks. I think the interest rate falls we have already had and those that we may have will actually fuel volume growth in the next 1 to 3 years. So that'll impact their top line. Whatever happens to NIMs, volumes are likely to go up, which should be a beneficiary. So I would still buy a major, but in terms of this one, I would call it a buy because it looks cheap and it is growing market share versus the majors.
Michael?
Yeah, look, they're doing a great job, and I think it's sort of similar to the regional banks where you have analysts come out every now and then with a buy recommendation because they look cheap compared to the majors, but they're cheap for a reason. And at the end of the day, this will always be much cheaper than the majors. The majors get great cost of funding. They have very predictable sort of cash flows and earnings. So that's why all the passive money just goes in there. It's just you don't have to think about it. So Judo will have periods where I think it can do really well, and then they might have some hiccups along the way, and then it gets sold off. So I think it's in a zone at the moment where they're doing a good job. It looks good value. It's recently sort of pulled back even just in the past few weeks and finding some good support. So I'd say it's a buy, more of a trade. I wouldn't be buying it and putting it in the bottom drawer for a few years, but you might get a few months of upside. So I'd be happy to buy it here.
And that is our stock of the day. Judo Capital, a buy from both of our guests.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.